Good evening, students. Welcome to the next live coaching classes organized by Board of Studies ICAI. Today's evening, we are going to have a discussion on this topic called refund under GST law. One of the important topic next to the topic input tax credit under GST law. As usual, protocol. Students who are viewing me, please confirm in the question window. Am I audible? And is my video properly available? Based on your confirmation, students, I will go ahead with my discussion. Kindly note, students, we have uploaded this particular material. Along with this particular material, the daily discussion which happens in the Excel file, we have also hosted on the ICAI website. I request all the students to download that particular Excel file for your day-to-day revision. To start with, the examination point of view, this particular chapter, you have a theory question for 4 marks. You have a problem which could be tested for 5 marks. So overall, 5 marks is the weightage which you can expect bare minimum in your examination. Thanks for the confirmation, Namita. There's one question from Namita before we start with our chapter called Refund under GST law. This one question, what she says is under Rule 86A, input tax credit has been fraudulently claimed by any assessee who is not in existence, which is not to be allowed. So if the assessee is not in existence, how it can avail input tax credit? See, this provision, Namita, when they're talking about non-existence of an assessee, the registration has been obtained, the business is not commenced. For bogus, like there is a application of registration showing a particular address. At that particular premises, actually the assessee does not exist. On records, on papers, there was a fictitious rental agreement. There is a fictitious, say, Aadhaar card or PAN card has been obtained on a particular name randomly. That particular registration having obtained, if they have shown some purchases, that would be called as your fictitious transaction. So this is the point which you need to understand from Rule 86A. So students, let us start with our today's discussion. Little important from examination point of view. The one chapter next to your input tax credit is one called refund under GST law. So today's session, we are going to have an overview of refund related provisions, relevant terms which is important for us to understand. We will analyze the provisions connected with the refund. How does a refund application happens? We will see various scenarios where we can think of making an application for refund. And in the process of filing a refund application, what activities are involved? We will, in the process, as usual, we will take few examples here and there to understand. Now, to start with, when we talk about this refund provisions, there is a refund of tax which has been paid erroneously. Let's take few examples to understand. Let us take few examples to understand why at all this aspect of refund comes into picture. Let me come back to my Excel file. Students, hope you are able to see my Excel file now. Please confirm. Yes. Now, let us take few examples to understand why at all we need to discuss this chapter called refund under GST law. Examination point of view, we have to get the pass marks. Beyond examination, what else we need to think of? Let's take first example. Accountant has made remittance of tax erroneously. Now, all of you are aware, always there is a possibility of data entry mistake which happens. Say there is a supply where IGST to be paid is rupees 10,000, but the data has been entered as 1 lakh. On the portal, while filing the data, the accountant has entered 1 lakh as per books and actual payment. Excess 1 lakh minus 10,000. So this is the amount which was paid erroneously by the accountant. Now, what are the options available in front of the accountant? Is the accountant expected to pass a credit note and make a set off? Sir, what if I have no billing which needs to be done? Even if I raise a credit note, I don't have any IGST for the purpose of set off. What I have to do? The only option available before us is making a refund application for this excess claimant. Second example, wrong interpretation of place of supply provisions. It is very common, students. It is very common while applying the provisions of GST law. Even like you as a article assistant, when you are advising the clients, there could be various scenarios where you would have given a wrong impression with respect to payment of taxes. Let us take a simple example to understand. A service provider, place of supply, service recipient. Service provider, say Mrs. ABC Transport. They are from the state of Haryana. Service recipient, Mrs. XYZ Private Limited. Now, this particular example, there is a nature of transaction. Freight charges received from the service provider. Rupees, say 25,000. Now, this service provider, ABC Transport, from the state of Haryana, he has given services to one of the customer. Say this customer is in the state of Bihar. The transporter picks the material from one place, goes to the recipient location, or from recipient location, he goes to a respective destination and gives the delivery of those goods. Now, this could be a transaction with respect to transportation service. Now, all of you are aware that under section 9(3), there is an applicability of reverse charge. Notified service for payment of tax on RCM, tax under RCM. Now, students, please confirm what is the rate of tax and what is the GST I have to pay. What is the GST amount I have to pay? Students, I'll give you 2 minutes. Please think through and let me know what is the rate of tax applicable in this particular transaction and what is the GST amount I have to pay. Should the recipient pay the tax of CGST, SGST, or should the recipient pay IGST? What would be your answer? Think, don't be in a rush. Please apply your place of supply provisions. Please recollect your topic on exemption under GST law. Registration, mandatory, compulsory registration under section 24. Think through all these provisions and let me know what is your view on this. Harsha gives an answer. So rate of tax is 5%. SGST, CGST has to be paid. Okay, let us see. So far, only one student has given an answer. Harsha says 5% is the rate of tax and CGST, SGST has to be paid. Okay, let me note this answer. 5% SGST and CGST. Okay. Let me also wait for a couple of answers and then we'll have a discussion. Sarvanan says 18% in IGST. Okay. Okay. So only two answers have received so far. One is Harsha and another is Savana. Let's go ahead with this discussion. Please note, students, rate of tax in relation to transportation of goods, 12% has been notified with input tax credit by the service provider, 5% without ITC by the service provider. As of today, if you happen to see the rate notification under GST law, 5% is the rate of tax where the service provider is not willing to claim the input tax credit. And 12% is the rate of tax notified where the assessee is willing to claim, the service provider is willing to claim the input tax credit. Suraya, you're right, 5% IGST. Now, if you assume that service provider is not willing to claim ITC, yes. Now, Suraya says that 5% is a rate and IGST has to be charged. Now, correct answer, students. Here, for a moment, we will make an assumption. Mrs. ABC Transport not registered under GST law. Let's make an assumption that ABC Transport. Examination point of view, students, whenever you're solving your problem, put the heading assumptions. It is presumed that the service provider, Mrs. ABC Transport, is not registered under GST. Now, once they're not registered, I would be knowing that 5% is the rate of tax. Now, 5% is the rate of tax. Service provider is in the state of Haryana. Place of supply. Now, when you go to section 12, we have to mention as per section 12, place of supply shall be the place where goods are handed over for transportation. This is in case of an unregistered person. Now, similarly, as per section 12, place of supply shall be location of service recipient if registered. Now, in this given problem, service recipient, this is XYZ Private Limited. We haven't said anything whether this particular recipient is registered or not registered. So for that, let's make the second assumption, students. Also, it has been assumed that service recipient Mrs. XYZ Private Limited is registered in the state of Bihar. Students, I draw your attention. Examination, whenever you're drawing your interpretation of provisions, if some data is not available, make a suitable assumption and then go ahead for conclusion. Now, please keep in mind section 12 when you have to refer in relation to transportation of goods by road. So what if the person is not registered? That is, the service recipient is not registered. So what if the recipient is registered? My answer changes. The place of supply provision changes. So here, since this service recipient is registered, my place of supply happens to be Bihar. Remember, students, this point is valid only when you make a note that the recipient of service is registered under GST law. Now, service provider is in Haryana. My place of supply happens to be Bihar. Service provider is in Haryana. Place of supply happens to be Bihar. It becomes an interstate supply. So combining these two aspects, my rate of tax will be 5%. My GST amount will be IGST. How much? My IGST will be 25,000 into 5%. This will be the amount of GST I have to pay. This will be the amount I have to pay. Now, this is the answer for the question. Examination, this is how we will answer. Now the question comes here is, for a moment, assuming accountant has erroneously paid CGST, say 625, and SGST rupees 625. Now, practically this is what is going to happen. At the time of looking into the transaction, I as an accountant am not aware of the GST provisions. So possibility that I would have done, I have paid the tax. But while remitting the tax, instead of paying CGST, SGST, I would have paid IGST. Or instead of paying IGST, I would have paid CGST, SGST. Anything could have happened. So considering those provisions, again, now what comes here? Important aspect is reference to Section 77 of CGST Act 2017. Mike, please make a note of this point, students. Please make a note. Section 77 of CGST Act 2017, where any tax which has been paid wrongly due to interpretation, due to place of supply being held understood erroneously, CGST, SGST remitted instead of IGST, or vice versa, CGST, SGST has been remitted as IGST, or vice versa, such tax needs to be paid under proper head. Such tax needs to be paid under proper head, and a refund application under Section 54, and a refund application under Section 54 has to be filed. Now, we have seen a couple of examples, students, where why at all a refund provision is relevant for us to examine in the day-to-day scenario. Now, coming back to our discussion, there could be a scenario where my refund arises in the regular course of business. That is, I have zero rated supply. I have been purchasing all my input raw material, where I have been paying CGST, SGST, or IGST. All that goods which are manufactured, I export out of India. So when I do export out of India, I need not pay any tax on exports. My exports are subjected to IGST with payment of tax, or I can execute a LUT or bond without payment of tax. That could be one scenario where on account of zero rated supply, I will file my refund application. Refund of IGST paid by tourist. Say there is a person who comes into India as a tourist, who doesn't stay in India for a continuous period of exceeding 6 months. That particular person, when he's going back from India, if at all he's taking back some goods along with him, he can be entitled for claiming a refund of the taxes paid. Refund of taxes in certain cases, which we have discussed of Section 77. Process of filing and verification. I'll take you through various aspects. Why we have to file a refund, how we file a refund application, how the officer concerned looks at your application for the purpose of filing of refund, and the various stages along with the forms concerned. Examination point of view, what would be tested? They'll be testing you examination of cases where a refund application has to be filed. They will also test you the process where your application has been filed. What is the right practice with respect to making application to the refund? And one aspect is problem will be tested for computation. Quantification of GST refund. How much is the amount of GST one gets entitled when refund application is to be filed. There are various mechanisms. These aspects we will discuss when we come to export of goods and services, when we come to inverted duty structure. So that particular problem, they will test you in your examination how a student will quantify in the given particular problem, how much is the refund the assessee is entitled for. So this particular quantification examination, it will be tested for 4 marks, or any of these theory will be tested for 5 marks. Examination, please wait and watch, either of a problem or a theory having a weightage of 4 marks to 5 marks. Now, this is something which is basic, which we need to keep in mind for us to understand. Now, under GST law, when we talk about this provision called refund, under GST law, when we talk about this aspect called refund, they define refund as refund includes refund of tax paid on zero rated supplies. Now, last class, if you remember, zero rated supplies, there are two kinds: export of goods or services, supplies to SEZ unit or SEZ developer. So if I make a zero rated supply, I have paid tax on that zero rated supply, I will get entitlement for refund of goods or services or both, or input or input services used in making such zero rated supply. There could be a scenario where I export goods, I export services without making payment of tax. Now what happens? There is an accumulation of input tax credit in my balance sheet under current assets, loans and advances. So that particular money which is getting accumulated, I can file a refund application because those purchases I have used it for zero rated supply. Refund of tax on the supply of goods regarded as deemed exports. In the previous class, we have understood advanced license, EPCG license or EOU. These supplies are considered as deemed exports. So any supplier who is making supply to this particular advance authorization or EPCG or EOU, the supplier has to charge GST, claim a refund of that particular amount. Why? Because it is a deemed export. This particular buyer would be using that in his production process, and he in turn is going to export. That is one more scenario which can be called as a refund, or a refund of unutilized input tax credit as provided under 54(3). This is in relation to inverted duty structure. I'll take you through one by one once I go to the couple of slides down the line. Next is a tourist. Examination, final level. Please expect a theory question for the 3 marks of these topics. Define the term tourist under GST law. Examine the provisions connected with tourist for the purpose of claiming a refund under GST law. As per section 15 of IGST, tourist means a person not normally resident in India. A person who comes to India who is not a resident in India, who enters India for a stay not more than 6 months. So any person who has visited India on a tourist visa, business visa, or any other purpose, who does not stay in India for more than 6 months for non-immigration purpose, that person will be called as a tourist. Why we need to study about tourists? Any goods which are taken back by the tourist. I'll give an example. So there is a gentleman called Mr. A. He comes from Switzerland to say Delhi. He has got a project in Delhi. There is say this Indira Gandhi International Airport in Delhi. This particular gentleman, who happens to be an architect, he comes all the way from Switzerland to India. He is there for a couple of project related discussions like drawings or design which are connected with the this Indira Gandhi International Airport. So in the process of his stay, this particular tourist purchases some equipments which are used for the purpose of design or architecture. And this gentleman, when he is going back from India, he carries back those equipments along with him. That particular gentleman, he will make a declaration at the international tourist checkpoint where he says, look, I'm a tourist who has come to India. These are the goods which are purchased in India. These are the receipts. These are the bills for which I have paid the tax. Now these goods I'm going to take back out of India. Those goods which is going to take back and he has produced a proper bill, he will be entitled to claim a refund under GST law. From that particular backdrop, this term tourist is something which is important for us. Now, your entire discussion on this topic called refund, this slide and the next slide, it is going to give you macro perspective of why a refund comes and what all scenario, what all transactions we need to see the refund related topic. Couple of inputs over here. So if you look at academical point of view, this is good from my examination point of view. What else? How does it help for us? Please keep in mind, students, down the line, you're going to get qualified. You will join industry. Over the period, you will become a CEO or CFO, or you would get into advisory as a consultant. There could be scenarios where there is a blockage of working capital. There's a blockage of working capital. I'll just give an example. Okay, I'll come to inverted duty structure and I'll give an example. So wherever there is a taxes which gets accumulated in your balance sheet. Now, why does the taxes gets accumulated in your balance sheet? Whenever there is a purchase, as per the provisions of your input tax credit, I account input tax credit. Whenever I make a sale, I collect tax from my customer. So there is a simple mechanism, input tax, output tax. I net off my input tax with output tax. In spite of doing that, assuming that my input tax gets accumulated in my balance sheet, the balance sheet current assets gets bulger every quarter because of input tax which gets accumulated. That point in time, you as a professional can knock at the door of section 54, which deals with your refund mechanism, right? All mistakes you do under GST law, please remember these two slides are going to give you an answer for that. To start with, zero rated supply with payment of IGST. What do you mean by zero rated? We understand that export of goods and services, supplies to SEZ unit or SEZ developer. So why do I supply with payment of IGST? I'll give a simple example for you to understand. Say, I'm a software company. I have imported a software which is used for some project management. This particular software I have been using in particular contract which I have to deploy. Now, as a software company, I have a customer. This customer is in the state of, say, he's in the particular location called Singapore. I have a team of people who work with me. So my register office in Bangalore. I have purchased a software. I have imported software, say from Kenya. The cost of the software is worth 10 lakhs. This software I have used for a particular project. I have executed the design. I have developed the code. This content I need to deliver to my customer. Now, please keep in mind, when I deliver this content to my customer, now 10 lakhs is what I have imported and I have put into my software. I have worked on that. The cost of the project comes to say 50 lakhs. 50 lakhs is my cost. On 50 lakhs, assuming that 18% comes to say 9 lakhs. I have paid IGST of 9 lakhs. This 50 lakhs worth software, I keep a margin of say 20%. So I keep a margin of 20% and this 50 lakhs, I add another 10 lakhs. For 60 lakhs, I raise an invoice on my customer who is there in Singapore. Now, please remember, when I raise an invoice to my customer in Singapore, the customer is going to make the payment of foreign currency equivalent to 60 lakhs, 60. So what happens to my 9 lakhs? Already have paid on reverse charge mechanism some tax, on forward charge basis to some customers. Now the question comes here is, this 9 lakhs sits in my balance sheet as a current asset, loans and advances, money to be recoverable in cash or kind from the local authorities, from the government authorities. Now this particular 9 lakhs, if I have to encash, so what I will do, on 60 lakhs, I will raise a tax of 18%, assuming if it comes around say 10.8 lakhs. From 10.8 lakhs, I'll reduce 9 lakhs input tax credit, balance 1.8 lakhs, I'll pay through cash. So once I raise the invoice, I pay say 10.8 lakhs as IGST. entire the 10.8 lakhs comes back as a refund in cash to my bank account. My GST authorities are going to refund back that 10.8 lakhs. Why? The GST law says that, the law of the nation says that you export goods, you export services, but not the taxes of the soil until and unless there is a treaty between the nations for the purpose of levy of taxes. A simple example. When we look at the customs law, there are certain products where every nation has a choice to discourage exports, to discourage imports. In relation to imports, we have anti-dumping duty, we have safeguard duty. Similarly, in relation to exports, there is something called export duty. For an example, onion, potato. Onion, there is a shortage of production. Say, we have seen days where per kg onion went up to 150 rupees. Now, when there is an acute shortage, the government of India ensures that this onion should not be exported out of India. Assuming 150 rupees is selling price in India, I export at 100 and say 200 rupees. I fetch 50 rupees excess when I export. The government wants to discourage that practice. What they do, they levy export duty, assuming for a moment, they levy export duty of say 50% of the value of goods. If I export onion worth 200, 100 rupees happens to be export duty, 300 rupees will be the cost of the onion. Now, the supplier, the seller will feel, instead of selling for 300, better let me sell it in the Indian market. So except few products where, as per the treaty between the nations, the goods are exported generally without payment of taxes. So this is the first example where I have used some inputs. I have developed a software. This software has been exported to Singapore. This is an example where I call that as a zero rated supply with payment of IGST. Second example, refund of unutilized input tax credit, that is zero rated supply without payment of IGST or inverted duty structure. Now, let us just discuss T here. Unutilized input tax credit. Zero rated supply without payment of IGST. Now, the same example, what we have discussed in case of software which was imported from Kenya, and I have developed a product which was sold to a customer in Singapore. So what if I supply the software worth 60 lakhs, I don't charge that 18%, say which comes to 10.8 lakh, I don't charge GST. Now that is the case where my 9 lakhs gets accumulated in my input tax credit. If I look at the 3B return, if I look at the P&L for that month, my income will be for 60 lakhs, my expense is for 50 lakhs. 50 lakhs is my expense and 60 lakhs happens to be my income. Net profit of 10 lakhs is there. So far, so good. Unfortunately, if you see that 10 lakhs, I should have that margin of 10 lakhs in my bank account. But what happens here? On 50 lakhs, 9 lakhs is a tax already I have paid to either my suppliers or to the government on reverse charge mechanism. This 10 lakhs margin, I should have seen that as a margin in my bank account. I wouldn't see that 10 lakhs. What is happening? My balance sheet, my current assets, loans and advances has a blockage of 9 lakhs capital. Only 1 lakh will be seen in my bank account. Now that is called accumulation of input tax credit, which is in relation to zero rated supply. Now this is one example why my accumulation happens. Second, inverted duty structure. I'll just give an example in relation to inverted duty structure so that you will understand this concept very well. Inverted duty structure. Let's take an example of a business model where there is a job worker. This job worker, what he does, this job worker does an activity of cutting bending, application of paint, and manufacture of, say, water tank. Now, imagine there is a company called TAFE. Most of people who are in North India, they would have heard this company called TAFE. TAFE is one of the large manufacturer of tractors in India. Assuming for a minute, there is a order from, say, particular agricultural cooperative society to purchase 100 tractors for the purpose of the rural villages which are covered in the state of Maharashtra, for agriculture purpose. Now, TAFE just sells the tractor. Beneath the tractor, there is a trailer. We call as a trailer. The trailer can be used for transportation of goods. The trailer can be designed for the purpose of carrying water or milk. The rural villages, if you see, tractors will have a big body, like your what you call British BP or HP. You have this oil tankers. Similar to that oil tankers, we have water tankers. I need that water tankers for rural agriculture purpose. So assuming for a minute, Mr. A is a job worker. Okay. Now this particular person, if you look at his purchase and if you look at his sale, now this gentleman makes a purchase of steel, then machinery, consumables, and paint, and also say labor, hired labor. Now, rate of tax, steel, assuming for a minute, 18% is the rate of tax. Machinery, some machinery used for cutting, bending, etc., 28%. Consumables, say 18% is the rate of tax. Paint, 18% is the rate of tax. Hired labor, 18% is the rate of tax. Now, if you look at the purchases made by this particular job worker, he has to buy steel, he cuts the steel, he does the bending activity using a machinery. Now, there is a machinery which is used for cutting, bending, doing a design shape and all. In the process of doing that, I need to have welding rods, I need to have this carbon dioxide gas, a lot of consumables. So consumables are taxable at the rate of 18%. Post doing this particular water tank, he needs to apply paint, interior and exterior. Why? There should not be any rusting. And also, in the process of doing this particular job work, he hires a manpower. And the supplier of that manpower charges rate of tax 18%. Now, what is a product which is generated, which is developed out of this job work? The product is called as water tank. He sells the finished product called water tank for agriculture use. Now, this particular water tank, assuming for a minute, has been classified as under HSN 85. Assuming this particular water tank is used as one of the component for agriculture purpose, and rate of tax for that water tank happens to be 12%. Now, this is the case. What happens here? We will take a costing. If I have to prepare a cost sheet for one water tank, I need to have steel. This is my purchase value and GST pay. I purchase steel worth say 2,85,000. Machinery, the cost of apportionment of machinery, say 65,000. Consumables, some 12,000. Paint, some 18,000. And hired labor, some say 40,000. Now, this is my cost of purchase. Now, look at the GST I'm paying here, 18%. Now, 82,100 is a GST I have paid on all my purchases. Assuming that this job worker keeps a margin of say 20%. So the sale price happens to be 4,20,000. On that 20% happens to be 1.2. On 4,20,000, I apply 20%, I get 5,04,000. This is my sale price. And my GST at the rate of 12% is 60,480. Now, here, students, if you carefully observe, on purchases, this gentleman A is paying a tax of 82,100. On sales, he is collecting the tax from customer 60,480. Now, this is a mechanism called as inverted duty structure. My rate of tax on purchases is higher than the rate of tax applied on my output. I repeat, the inverted duty structure is indication where rate of tax on purchases, on inputs is higher than output. Now, this scenario, I have a accumulation of input tax credit, ITC accumulated. Now, if you look at this example, I have 82,000 as my input tax credit. I have 60,000 as my output tax credit. Now, for 1 unit, students, 1 unit, there's an accumulation of input tax credit of 21,000. Assuming this gentleman has to manufacture 100 units, 21,620 into 100, straight away, this amount goes and sits in your balance sheet as an accumulation. Now, this is what has been defined as your inverted duty structure. Next, refund of tax paid on deemed exports. Deemed exports we have discussed a while ago. Advance license, your EPCG license, and EOU. Any goods I supply, I as a seller, I charge GST, claim a refund of that from the department on the basis of a confirmation from the end user. The refund of balance in electronic cash ledger. It could so happen that I deposit money. I always keep some sufficient balance in my cash ledger. So why do I do that? There are certain companies, there are few companies, especially the large MNCs. They ensure that they keep money well in advance so that there is no shortfall for the management approval. For taking a GST approval every time, they need to put up a note, they have to take a permission from the management. What if the concerned approving authority is not available? What if the transaction doesn't happen? What if there is an issue with the bank? Not to have these issues, there will be little surplus money kept in the cash ledger. God forbidden, the business doesn't go well. The other day, there was one press meet called by Honorable Finance Minister. In the case of this entity called, there was a liquidation which was called for because of some fraudulent activity happened. What if there is a cash balance in my electronic cash ledger? I haven't been doing any business. I can file a refund application. My money, instead of putting into bank, I just keep in the cash ledger. I can apply for refund of that money. Refund on account of supply which is not provided either wholly or partly. Now, this is one point majority of you would be using this in your career. Supply which is not provided. Sir, I am a constructor, I am a builder. I do construction related activity. I have received 2.5 lakh from my customer as a token advance for the purpose of buying a particular flat. Unfortunately, I have said, if the buyer is willing to purchase, within 30 days, he has to make further 10%. Otherwise, he has to cancel his particular what you can say booking amount. So 2.5 lakh is the money I have received. On receipt of that money, I have paid tax. But later, customer comes back and says to builder, Praveen, I'm not interested to buy this apartment. Please give me back by refund. I have to protect interest of my business. I have to give a refund back. Supply which is not provided. Now, only if I sell the construction activity, it is called rendering of a service. Second example. So there is a credit in my bank account. There is a credit in my bank account for 5 lakhs. Because there is a credit in my bank account 5 lakhs, I don't know from where that money has come. I'm a very, very genuine businessman. As a CFO, I'll say, don't play with the government money because compliance is important. There's a credit of 5 lakhs, remit IGST of 18%. As per my instruction, my accountant has remitted 18%. After that, the marketing fellow comes after 10 days and says, Praveen, there is one of the customer who has paid 5 lakh rupees to our account. Erroneously, instead of paying to some other vendor, he paid to our account. We need to refund back that 5 lakhs to the customer. Now, this is a scenario where I haven't made a supply. I haven't issued tax invoice. I haven't issued advance receipt voucher. Because I received money, because that money is not known, what is the nature of supply? I just paid a GST of 18%. Now, that is a scenario where when there is no supply, either partly or wholly, I can think of filing a refund application. This is the next scenario. Refund of tax wrongly collected and paid under section 77. Students, if you recollect, one example I gave, where the accountant, while calculating the freight charges, instead of paying IGST, he has paid CGST, SGST. So this is another scenario where I can file a refund application under section 77. I recommend all the students make a note of this section 77. This is like Vajrayuda. Reason, many of the assessees, including we as a consultant, 2017-18, 2018-19, 2019-20. First 3 years, blunders would have been done with respect to payment of taxes. Wrong interpretation of the GST provisions. I'll just come to an Excel file again to make you understand this provision. So there is a example of activity called renting of immovable property. Landlord, property, location, then tenant. Landlord, Mr. A. Property located in, say, Tamil Nadu. Tenant is from Madhya Pradesh. Mr. A registered in, say, Karnataka. Now, or I'll say registered in the state of Tamil Nadu. Let's make it simple. Landlord has registered himself in the state of Tamil Nadu for a property he has got in the state of Tamil Nadu. Tenant happens to be from Madhya Pradesh. Tenant has no registration obtained in Tamil Nadu. Now, this tenant has opened a branch office in Tamil Nadu. He wanted to explore the business prospects. He thought, okay, if I get a good orders, let me take a registration in Tamil Nadu. Otherwise, let me manage from the state of Madhya Pradesh. This is a thought process. Now, the activity is renting of immovable property. Supplier, place of supply. Supplier is in Tamil Nadu. Place of supply. GST has come afresh. We are not aware of place of supply provisions. What we thought, since this gentleman, tenant, happens to be, say, XYZ Private Limited, registered person in Madhya Pradesh. Now, accountant felt because the tenant XYZ Private Limited is registered in Madhya Pradesh, any service rendered to a registered person, the place of supply happens to be Madhya Pradesh. So what is the GST charged? Supplier happens to be in Tamil Nadu, place of supply interpreted as Madhya Pradesh. Now, because both the activities are in two different state or union territory, IGST has been charged. Now, after 3 years, you have got to know, there is a provision called section 12 under IGST law, which deals with your place of supply. As per section 12, subsection 3, any service in relation to immovable property shall be the location of such property. So as per this section 12.3 of IGST Act, I get enlightened. After 3 years down the line, Akshay becomes a knowledgeable person. Akshay goes back to the client and says, my dear landlord, all along you have been paying IGST. Please understand that there is a provision called section 12.3 as per which the place of supply happens to be Tamil Nadu. Now, this was an assumption which you were believing all along. Please understand that this is wrong. So he'll ask, so what I have to do? Tamil Nadu happens to be the proper place. You are registered in Tamil Nadu. You should charge SGST, CGST. Now, this point in time, you will recall provisions of section 77 of CGST Act. And you will recommend, don't worry, you make the proper payment of tax of SGST, CGST and file a refund for this IGST. File a refund for this IGST. Now, little technical hiccup is there. When I file for a refund of IGST, when I pay proper tax, I have to ensure that there is a principle called unjust enrichment. That means the taxes have not been enjoyed. The taxes have not been enjoyed is a provision I have to establish before the GST authorities. There's a little more detailed discussion. I'll explain with respect to unjust enrichment. This is my next example of section 77. Next, tourist leaving India. I have given an example where an architect comes to Delhi. From Delhi, when he is going back, he'll produce the relevant documents and those goods which is taking back, he will claim a refund of those particular items. Tax is becoming refundable on account of judgment, decree, order, direction of an appellate authority, tribunal or court. I'll give an example. There is one recent judgment which is from Gujarat High Court in relation to the transportation of goods by vessel from a place outside India to India. I repeat, the freight charges paid to the shipper where goods are transported from a place outside India to India. This particular activity has been defined as a notified activity under section 5 of IGST Act. Now, what happened? When I import the material into India, please pay attention, students. When I import material into India, customs duty I have to pay. So when I go to the customs officer asks, Praveen, what is the CAF value? Cost, insurance, freight. Cost, insurance, freight. On these three elements, I pay customs duty, I pay the relevant cess, I pay relevant anti-dumping duty, safeguarding duty if available, and also IGST. Now, IGST was paid on freight. In addition to this, my section 5 under IGST Act has notified that for this transportation of service, you need to pay tax under reverse charge under RCM once again. Now, this was a painful thing. Sir, I have paid at the time of import on CAF customs duty. I have paid equivalent IGST. Again, you are asking me to pay the tax on this freight under reverse charge. This is becoming a double taxation. For one transaction, there cannot be tax levied twice. Article 246. This reached the Gujarat High Court in case of Mohit Minerals. Gujarat High Court examined in detail and said, yes, this is an unlawful collection. The IGST demanded on reverse charge has been struck down. In spite of that, the department is making a demand. Why? This particular judgment, which came from Gujarat High Court, was appealed at Supreme Court level. By whom? By the GST department. GST officers doesn't leave you just like that. What they will say, they will send a show cause notice. Praveen, see, you have received the goods from foreign nation. You have received the freight charges. Why haven't you paid IGST on reverse charge? I, as a prudent taxpayer, I'll say, sir, my dear officer, please refer to that Gujarat High Court where they have given a stay. Immediately, the officer says, Praveen, don't worry. We have gone for appeal at Supreme Court. Till the matter gets finality, you have to pay. Now, it is a big $1 billion question. Now, it is like a Dharma Sankata. The management asks, so, like assuming for a moment, I am a tax consultant. Praveen, you tell me what needs to be done. Now, I'll look at the situation like this. Sir, whatever tax you have to pay, you are entitled for input tax credit. Now, it is a working capital issue. Option 1, you pay the tax and claim a input tax credit. Option 2, since the matter is pending at Supreme Court, Article 246 clearly says that there cannot be a double taxation. It is a strong case. Let us argue. Let us go for a writ petition on that. Now, the second approach is an aggressive approach. First approach is a conservative approach. For a moment, the management has taken a conservative approach. What they have done, they pay tax on reverse charge. Unfortunately, whatever tax they have paid, it is getting accumulated in balance sheet. Reason, they were not in a position to set off that with the output tax. Over a period of time, assuming the Supreme Court gives a verdict saying that it is a clear violation of Article 246, there comes, the tax becomes refundable. Why? I'll come back to my Excel. Students, make a note of this Article 246. This is like a Vajrayuta for many of you once you get into the profession. Need not be. It is not that you should get into the practice. Even if you're in industry, please remember this Article 246. Violation of authority to collect tax. Now, for a minute, when Supreme Court gives their verdict, I have a right to get that tax collected. Payment 1, payment 2. Now, please understand this carefully, students. This is a crux of entire discussion. Payment 1, IGST paid to Customs Authority. IGST paid on reverse charge mechanism. Now, when the matter will be examined in a court of law, they will see, look, there is a transaction under Article 246. Once you can levy a tax, twice you cannot levy. So what happens? This becomes a genuine tax, and this particular tax, what you are paid second, this becomes a ingenuine tax. Means the Supreme Court is going to struck down the levy. Now, please keep in mind, something I have paid, which is not in the capacity of tax. There is no obligation for the tax collector to retain that amount. I repeat, any money I have paid without authority of law. When Supreme Court gave its verdict saying that whatever tax Praveen has paid on reverse charge mechanism is not a money to be collected as tax. Applicability of Article 246 failed. The moment they say 246 failed, the money what I have paid does not have a characteristics of taxation. Now, the moment there is a failure, means the right on that money is taken away from the GST authorities. So the moment they are taken away, this is nothing but the public money which is held as a custodian by the GST department. That is the money I'll get back as a refund. Now, this is the point which we talk about this aspect of money refundable on account of a judgment, decree, order, direction of an appellate authority, tribunal, or a court. Now, all these cases, when I get a favorable order, whatever taxes I have paid, I can get back as a refund. Now, question comes here from practical point of view. Sir, is it the money what you paid on reverse charge? So, what if I have a input tax credit? If there is a transaction, I have used making a payment of input tax credit. Can still that be called as a tax? Can still that be called as a money undue? Any money which was paid without authority of law cannot be retained by the GST department. Now, that is a point where I go and knock at the door of refund. Next, on finalization of provisional assessment. This is one provision where I do a business. I don't know the mechanism how to collect GST. Take a classic example. Now you are having this EV batteries. The more business becomes dynamic, the more will be the problems we come across. Say EV, electronic voltage battery. I buy a SUV vehicle. The cost is 3,25,000 plus variable component. Cost is 8,25,000 plus no variable component. I don't know how many of you have seen this particular electronic vehicles. When I buy an electronic vehicle, I'll be given a choice. You buy the vehicle for 3,25,000. I'll give you a battery which is not permanently transferred to you. It is on use basis. You use it for say 300 hours. You come back for recharging. You pay 500 extra. Or I'll give you a permanent battery. You can charge at your home. I'm just giving you an example, a hypothetical example how business is going to be innovative. Now, when I come with this particular business model, and you youngsters are going to the people who are going to give these kind of business solutions which are very, very dynamic to grab the attention of the customers. COVID, many people have been started working from home. Everyone felt instead of traveling in a public transport, it is good to have a particular own vehicle. And also, now government is thinking a lot how to get this pollution control, how to get promoted with this particular vehicle. Now, there is a concept saying that you buy this particular vehicle, you get a reduction, you get a rebate of income tax. One side you get income tax benefit, another side you get this own vehicle. Now, when this is a business model, I don't know how to charge GST. I don't know whether it is a service or lease or sale. I don't know what is the nature of thing. So what I will do, I'll go and file an application before the commissioner, provisional assessment. I'll say, my dear officer, look, this is a business model. I may collect 3,25,000 plus every 15 days, 500, 500, 500. I may collect 8,25,000. Now, please tell me, how do I charge GST? Now, based on this particular business. So in this particular business, they'll say, okay, Praveen, you have come with a business model. This is the volume of business you have anticipated. Do one thing. On this particular volume, let us assume 18%. Deposit this tax as a pre-deposit. At the end of the assessment, means the commissioner is going to devise a mechanism to advise me how should I pay the taxes on a periodical basis. So that is the case where I go for a provisional assessment. Now, when end of my provisional assessment, I get to know I have paid deposit more than what I have to pay. I can file a refund application. Refund of taxes on purchases made by this special organizations, United Nations, UNO, WHO, UNICEF, World Bank, or the embassies, etc. There is a treaty between the nations saying that there are certain organizations, they do function in every nation and they should be given a special privilege. For example, World Bank. Every now and then we see, like in the news, so-and-so state of Rajasthan, so-and-so state of Telangana, so-and-so state of Tamil Nadu. They have approached the World Bank to lend money for so-and-so sector development. The World Bank, they have their operations established in India through their own setup. So when these organizations come to India and they function for various objectives, they incur certain expenses in India. Those expenses where they pay taxes, they can claim a refund. So there is a separate mechanism discussed in relation to those organizations. And there is a retail outlets which are kept in the international airports, like duty-free shops. I have a duty-free shops. Generally, when we think of this duty-free shops, alcoholic liquor comes into picture. Not only alcoholic liquor is exempted. I mean, it is not GST supply. Other than alcoholic liquor, assuming that there are certain items which are there in that particular duty-free shop. Now, those items which have been sold, the seller can claim a refund of taxes paid. For an example, sir, I have laptops. I'm into the business of selling gadgets. So there is a shop in, say, Indira Gandhi International Airport, say Terminal 2 in Delhi. I have 50 laptops purchased, and those laptops I keep in a store. Please keep in mind, 50 laptops when I purchased, I would have paid the respective taxes. Those 50 laptops I take to this trade-free shop. From there, I make a sale of 10 laptops to the customers who are going for a foreign trip. Once the customer, like any passenger gets into that duty-free, that zone, he'll never come back unless there is a exceptional circumstances. So the goods sold in that zone are meant to leave out of India. So this seller, whatever quantity of goods which he has purchased from the domestic direct area, on the basis of tax invoice, where he's shown that these goods have been sold, he can file a refund application to claim a refund. Last but not the least, advance tax paid by CTP or NRTP. Advance tax doesn't leave you either indirect tax or direct tax. Advance tax is a concept where, as you remember, a person who is registered as a casual taxable person, a person who is a non-resident taxable person, before they commence their business, 5 days well in advance, they need to apply for registration. At the time of applying for registration, I need to disclose the expected turnover I am going to do. On the basis of volume I declare, I pay something called advance tax. Now that is the amount I claim as a refund under section 54. Now, before I start with this, let me see if there are any questions so far. So far, so good. Namita has one question. If A do merchant export through B, if A does merchant, I think it is incomplete. Which example you're talking? A does merchant export through B. Example, please let me know the example, Namita, so that I can correlate and clarify further. There's one more question from Namita. If John, a citizen of Italy, buys a luxurious car in India, which he takes back to Italy, will he get the refund of IGST paid? There is a list of items which are earmarked, and generally goods which have been purchased, which are taken back along with him, he is entitled for a refund. So notified list is there, like sin goods, like alcoholic, beverages, not alcoholic liquor, beverages, then your pan masala, tobacco products, cars, I'm not sure, Namita, let me check on that. But as of now, a tourist cannot claim a refund on cigarettes, tobacco products, and your beverages. These are the goods where he cannot claim. With respect to vehicle, I'll check and confirm back to you. First provision, refund of tax paid on export of goods. Now, this is the simplest business solution you can recommend. Now, students, please keep in mind, when you read through this chapter, you should be in a position to use this knowledge for advising to the clients. When someone comes to you for purpose of refund, this is one of the easiest and the best route to get a refund from the GST authorities. The business model is such a way that there is a manufacturer or there is a trader. I repeat, there is a manufacturer or a trader. This manufacturer or trader exports the goods out of India. So when he's exporting the goods out of India, as you are aware, goods can be exported, not the corresponding duties and taxes. There's a accumulation of input tax credit which happens. Now, this is a transaction where you advise to the manufacturer, export the goods with payment of IGST, where no refund application is required. Why? When you export the goods, your shipping bill, where the EGM filed by the person in charge of that conveyance shall be deemed to be a refund application under GST law. I repeat, I as a manufacturer, when I export goods out of India, I have to go to the customs authority, file relevant forms, get the relevant documentation. What I get on hand is called shipping bill. This shipping bill is the application for a refund under GST law. That means when you export through air, when you export through sea, when you export through land, the person in charge of that aircraft, vessel or vehicle, they file something called EGM with the customs authorities, where they say, in this aircraft, in this vessel, in this vehicle, this is a list of consignments and these are the list of shipping bills. I'm taking the goods out of India. That particular declaration is a form which is called application for refund under GST law. Now, what is that I have to do? When I give the goods to the customs authorities, I have to tell, my dear officer, these goods are meant for export. The value of goods is so much amount in foreign currency. I have a choice, selection, with payment of IGST, without payment of IGST. Please keep in mind, when I export, I have two choices, just a tick box, with payment of IGST, without payment of IGST. The moment I say with payment of IGST, what happens there? My shipping bill, whatever foreign currency is there, foreign currency multiplied by the customs rate given under the customs notification, I get a INR. On that, equivalent IGST is computed. Please keep in mind, my shipping bill just gives the data to a portal called ICAI. I've written here. ICAI is a customs portal. So when I export the goods and I file a shipping bill, these two documents speak to each other saying that Praveen, having so-and-so GST number, exported so-and-so goods, and he has chosen the choice called with payment of IGST. Now, this communication from the ICAI portal comes to the GST portal. Now, in GST, when I file my GSTR1, there is a table called Table 6A. Table 6A. In GST, I'll say the goods which are exported, customer name, the shipping bill number, the port code, the value of the goods, and corresponding IGST. Please keep in mind, my GSTR1 Table 6A speaks on its own. What is the invoice number? What is the corresponding shipping bill number? What is the value of goods? What is the rate of tax? And what is the IGST applicable? Now, this information, my GSTR1 matches with ICAI. Now, this is called data integration. What is happening here, students? The data on GST portal is speaking with the data on ICAI portal. There is a two-way communication. ICAI sends one data, GSTR1 sends one data. This will be mapped and validated. When the validation is success, please keep in mind, even a rupee, even a paisa difference will be a validation failure. Absolute value should match. So when I have a shipping bill, customs, there is a rate notification. Every shipping bill I file as per the given customs exchange rate, the foreign currency multiplied by that gives me INR. That is the INR. I have to use it for my GST purpose. Please keep in mind, my foreign currency, if there is a difference between my accounting value and the customs value, there will be a mismatch in data. So what if the data matches? Then it is deemed to be an application, and within a period of 45 days, that money comes and hits your bank account automatically. You need not approach the GST office. You need not approach customs department. You need not file any application. This is called automation, which was done under GST law. Hope this is clear, students. First, a refund called a refund of tax paid on export of goods. This is called automatic route. This is called automatic route, where you don't file any separate refund application. Anyone has any questions so far? Please let me know. I'll clarify before I go further on this particular topic. Padmanabhan has one doubt. So what is the difference between section 16.3a and section 16.3b of the IGST Act, as B does not speak about unutilized input tax credit? 16.3a and 16.3b. Padmanabhan, see, section 16 talks about your zero rated supply. Let me come to that. Section 3A says I can export the goods and services without payment of tax. 16.3b says I can make that exports with payment of IGST. So 3A says you execute a letter of undertaking or a bond. Choice is given to you. You as a manufacturer, you as a supplier, you as a trader. You have a choice to export without payment of IGST. Have a LUT or bond. You need not pay any taxes. Just execute LUT, where you give a guaranteed that within a period of 3 months from the date of invoice you export. Within a period of 1 year from the date of invoice, you get the money in convertible foreign currency for the services. This is your 16.3a. 16.3b says, Praveen, you export or supply to SSA with payment of tax. And those taxes, you can file a refund application under section 54. So this is the difference between 3a and 3b, Padmanabhan. Students, hope so far so good. Namita has a doubt. So what if Mr. A does a merchant export through Mr. B? If A has charged GST at a regular rate, will refund not available to A as much? It is available, Namita. There is a separate slide. I'll come to that point also. There is a separate slide. We'll discuss on that. Next. Now, having understood this export with payment of tax, now next important aspect is what is the time limit? Everything comes with a cost. Everything comes with a cost. What is the time limit within which I have to file a refund application to look at the benefit I have to get from the transaction? So when we talk about this refund application, any person, they have discussed around 14 transactions where a refund can be obtained. In any of these 14 transactions, when you have to get a refund, they say that a person who is filing a refund for payment of tax, payment of interest, or any other amount, he has to file an application within a period of 2 years, from a relevant date. So for each of those transactions, whatever we have discussed, they are put into a meaningful buckets. And based on that meaningful buckets, what they say, boss, you file an application before expiry of 2 years. So 2 years is the time limit from relevant date. So you need to understand the transaction. For this transaction, fix a relevant date. Once I know the relevant date, from here, the time limit is 2 years. I repeat, whatever 14 transactions we have discussed in slide number 5, slide number 6, those 14 transactions, you put into bucket 1, bucket 2, bucket 3. For that particular transaction, identify what is a relevant date. This relevant date, from there, I have a time limit of 2 years. Now, this is the macroscopic view. So, to understand that relevant date, section 54 explains in this fashion. First, export out of India. First, goods exported out of India. Goods exported out of India. Services, again separately is there. We are talking only about goods. Now, when I say exported out of India, with its grammatical variations, the goods have been taken out of India. Question comes here. Sir, I have supplied goods to a SEZ unit. Will I apply this provision? Answer is no. Only in relation to export, that is physical export out of India. So what if this is supplied to SEZ? Answer is wait and watch. So if the goods are exported out of India by sea or by air, the day on which the ship or aircraft leaves India. So now this is little tricky. Sir, I am a exporter. I cannot go to the customs port. I cannot say Tata bye bye to that particular ship vessel which is going out of India. I cannot go to the airport, sit there for 6 to 8 hours to watch the flight is taking off. Once it goes beyond the air, I cannot see whether it crossed territorial waters or it doesn't cross territorial waters. How do you explain that? Now, please keep in mind, there is a EGM, Export General Manifest, EGM file. This is made available. This is made available by the C&F agents. Any export or import transaction, there is an agent called clearing and forwarding agent. This gentleman gets a copy of EGM, that means the Export General Manifest, which is filed by the person who is in charge of that vehicle or aircraft. That is a date relevant for this leaving India. So what they say, from the day the goods leave India, from there 2 years is the time limit. Now, to understand this particular example, let me give an example to have a better understanding. Now, take an example. Export of goods. Supplier, registered person in Kerala. Invoice date 15th March 2021. Removal from factory. My goods are removed on, say, 14th of April 2021. Shipping bill, say 30th from March, April, May, June. Okay. 30th May 2021, EGM date. 31st May 2021. Generally, students, there will not be any gap between shipping bill and EGM. In general, exceptional cases, there will be a gap. I just gave a theoretical example for understanding. Now, when I have to file a refund application, so this invoice, value of goods, IGST paid. The value of goods is 32 lakh. And I paid IGST of 18%. Now, I paid IGST of 5,76,000. What is the relevant date for us to file a refund application? Relevant date. As per the provisions of section 54, my relevant date is the date when the aircraft or the vessel leaves India. So in this particular transaction, my relevant date is 31st May 2021. So from 31st May 2021, time limit for filing application. My time limit for filing application, 2 years. So I'll say 31st May 2023. On or before 31st May 2023, I, as an exporter, have to file a refund application to the GST authorities. It is not invoice date. It is not your filing of GST at 3B. Why? In relation to export of goods, My provision clearly says that the relevant date is the day when the aircraft or vessel leaves out of India, exported by sea or air, where such aircraft or such ship leaves India. So the day it is leaving India, that is a relevant date. Please don't get confused in your examination. 4 marks will be the theoretical question where they'll give you various dates just to confuse. Like in this example, 15 March was the invoice date. Removal happened on 15th of April. So why did it happen? Various reasons. I don't have manpower, or the truck is not ready. The C&F agent, the consignment is not ready. So when you have to send the material through ship, it doesn't go on a everyday basis. The ship travels once in a fortnight. So I have to wait for the next ship which is available to carry my consignment. And also in case of sea, the transactions which happen to sea, I have to block my space well in advance, at least 30 days well in advance. So this is an industry where the so-called C&F agents, they block the space on behalf of the exporters, and they get commission from the shipper for getting the business. Now that is a different ballgame altogether. In case of exports, please keep in mind, my relevant date is the day when the goods leave India. So when the goods are exported by land, the day on which such goods cross the frontier of the Indian soil. Like example, Nepal, Bhutan, or what you call Pakistan. Now, when the goods have to go through the land, like the moment it crosses the frontier, the frontier of India, that is the day relevant date. In my EGM, I could find that particular relevant date. So examination weighted March, 2 marks question for the relevant date calculation. If the goods are exported by post, date of dispatch of goods by the post office from the place outside India, concerned place outside India. Next. With respect to deemed exports, please keep in mind, whenever I talk about deemed exports, advance license, EPCG, EOU, where the return for that particular deemed transaction have been filed. I have sold goods to EOU customer in the month of March 2020. In March 2020, when I've sold the goods, the refund will be the day when the return for March 2020 has been filed. So if the return has been filed on 20th April 2021, then from 20th April 2021, 2 dates. So what if my return is 20th April due date? I have filed on 25th April. Here, the law does not use the language due date. The law uses a language, the date on which return relating to such export is furnished. Examination, unfortunately, you don't have a choice, I don't have a choice. As an academician, even if I forget, I can open the material and say, it is not due date, it is the date of filing of return. But for examination, you have to remember these smallest in between, finest points which will be tested in your examination. Again, wait and watch for 2 marks adjustment question. In relation to deemed exports, the date on which return has been filed. That is the day from which 2 years is calculated. So examination, what they will say, March 2021, the due date is say 31st May 2021, but the SSC filed on 31st July 2021. Why? COVID time, though there was an extension from say 20th May, it was extended till 31st May, but the SSC filed on 31st August. Please keep in mind, the date they have referred is date on which a return has been furnished. So from 31st August, 2 years is what I have to calculate. Moving on further, services, little important. I draw your attention, little important over here. In relation to services, the day I receive money in foreign exchange, where after the services have been finished, after the services have been completed. That means to say, I rendered services on 30th June 2021. For that particular services, I received money in foreign currency on 31st August 2021. The day when I received money in foreign currency, that means money was received after rendering of services. With respect to services, there could be two choices. I receive money in advance, or I might receive money after rendering the service. So what if mix and match? 50% advance, 50% after rendering the services. So this particular point is where I have received money, convertible money in convertible foreign exchange or INR. So where will I get a INR in relation to export of services? Yesterday we discussed an example, Nepal and Bhutan. Any services which are rendered to Nepal and Bhutan, the money which I receive in INR is deemed to be accepted for equivalent foreign currency by RBI. So there is a special approval for exports to Nepal and Bhutan. Bhutan, there is a separate provision. I'll just explain here only. Any goods which are exported to Bhutan, the refund goes to the government of Bhutan. I repeat, Bhutan is an exceptional case. Any goods which are supplied to the state, the nation called Bhutan, the tax which was paid will actually travel to the state of the particular government of Bhutan. This is a special provision. The exporter will not get any money on that particular transaction. So what he will do? He will collect that particular money from his customer. Now coming back to this point, where the money was received in foreign currency, where the supply of service has been completed prior to receipt of payment. So I rendered my services on 30th June. I received money for this on 31st August. So my relevant date in case of services is 31st August. Why? My complaints, I think Padmanabhan asked this question. Padmanabhan asked, so what is the difference between that subsection 3A, subsection 3B? 3A talks about LUT or bond. I exported services to Singapore. I have taken a letter of undertaking. What? I ensure that money will receive in foreign currency, convertible foreign currency, within a span of 1 year or the extended time by RBI. So in this matter, they're waiting for your money to receive. So the money which was received in convertible foreign exchange, from this day, 2 years will be calculated. So alternatively, I have issued an invoice where payment for the services were received in advance. So I have received money in advance. The day you raise the invoice, that will be the relevant date. So just receipt of money, I don't obligate myself to say services have been completed. If I presume that advance receive date is presumed to be the relevant date, what if invoice is not raised? The exporter is getting the refund without even actually rendering the services. So to control that, they have given two choices. Praveen, when you have rendered the services, the day you receive money in convertible foreign currency, that will be the relevant date. What if you have received in advance? The day you raise invoice, that will be your relevant date. Students, don't get confused. These are important. Why? Most of the cases, when you file a refund application will be rejected by the department. Most of the people have a common understanding. The day I have raised invoice, the day I file my refund, the day I have filed my return, that is the day they presume that relevant date. In relation to services, these two aspects have been defined this manner. Moving on further. Now, the export of goods, export of services. These are two things which will be tested in your examination by and large. Rest all are common sense, general logic. We can even otherwise remember easily in your examination. In case of a refund, which is on account of a judgment, decree, order by an appellate authority, tribunal, or a court. The day that order communicated, the day that judgment has been communicated. See, most of the times, if you recollect, any particular courier comes, say, you get a particular courier from the government office, or you get a speed post from the government office. The practice is this envelope has got the show cause notice. This envelope has got the order copy. Most of these orders will be sent through a register post acknowledgement due. So what I will do, the day I have received this, I'll just make it on the order copy, saying that the order which was served, passed on so-and-so day, I have received on so-and-so date. Wait, my postal department delivered on so-and-so date. Now from there, 2 years is to be calculated in case of a decree. Inverted duty structure. Now, inverted duty structure, the day I file my return under section 39, that is GST 3B, for the period in which such refund arises. Now, here, the language they have used, in case of an inverted duty structure, the due date will be furnishing of return under section 39. What is this return under section 39? GSTR 3B. All of you are aware that the GST tax to be paid to the department is 3B. GSTR 3B for the period in which such claim of refund arises. Now, this term for the period is a little important for us to understand. I'll give you an example to remember this example very, very easily. Inverted duty structure, relevant date. Now, in case of inverted duty structure, let us take an example. We discussed the example of this manufacturer who converts this steel into a water tank. What is this job worker do? He cuts the steel, he bends the steel, he makes a water tank, he applies the paint, he does the welding activity, he assembles on the tractor. What he's selling? He's selling a water tank, right? Now, purchases, same. So purchases happen in April 21, May 21, June 21. Assembly. My assembly or manufacture. It takes say 1.5 months for each of process. All process hold together. April 21, by June 21, the metal will be ready. May 21, say June partly, July other. And June 21, it is ready by say September 21. Now, look at this case, students. For April 21, whatever I have purchased, I manufactured in June 21. Now, sales happen in June 21. Unless I manufacture, I cannot make a sale. I repeat, unless I manufacture, I cannot make a sale. Now, question comes here. Refund application. Should I file refund application for April 21, May 21, June 21 separately? Should I file my refund application separately for each month or club the months? What would be your answer? What would be your answer? I have choice 1, file a refund application April separately, May separately, June separately, or club all 3 months together. By the way, clubbing of months is permissible under GST law. What would you recommend to your client? Club all the 3 months together, file the refund application for quarter 1, one single application. What would you recommend? Let me see your choices. Then we will explain this. Courier Namita, it will be considered through air the day when the aircraft leaves the nation. That will be the answer to your question, Namita. Students, please give your answer for this. Should I club 3 months or should I file application separately for these 3 months? Akshay says, the time of supply will be 15 March 2021 and we have to take invoice in 3B for April 21. Absolutely correct, Akshay. With respect to that export transaction, the moment I have raised invoice in 15 March, I show it in my GSTR 3B. I also file GSTR 1. But in table 6A, I cannot fill shipping code shipping bill details in April 21. I will wait till June 21. In June 21, I do amendment of GST 1 to fill my shipping bill. Benefit of other students, I'll put this point what Akshay was talking. While discussing with this provision called export of goods, I say that the invoice was raised. The invoice was raised in the month of March 21. April 21, the physical goods went out of the factory, but only in June or July 21, June 21, the goods were exported out of India. The question comes here is, so what will be my time of supply for the purpose of disclosure in returns? Answer is, as per my section 12, the day of removal. Invoice prepared will be the relevant date. So as per section 31, I disclose this export transaction in my 3B. I also disclose in my GSTR 1. The question comes here. Sir, in the month of April 2021, when I file my GSTR 1, I don't have shipping bill, I don't have port code, I don't have relevant other details. These details I will upload in June 21 when I have these information for me to upload. What I will do, I'll amend my GSTR 1 with this information, right? So this is the answer to your question, Akshay. Coming back, Namita says, as sale happened in June, clubbing of 3 months is preferable. Suraya says, clubbing of 3 months is a good option. Akshay also says, club the months if you're having a sufficient working capital. If the amount is more, we will require working capital, we will go for monthly. Now, this is the answer I was looking for. Akshay comes from a business perspective. What Akshay says, if the working capital, there is an issue, let us not club all the 3 months together. Let us file an application for every month. Now, the practical challenge, students, the practical challenge you have is, in the month of April, only purchase is there. There is no sales. Whatever purchases I have done, because there is no sale, the refund will be 0. I repeat my point. When I file refund application for April, my purchases of April, some amount is there. My sales of April, 0. Because my sales is 0, they will say there is no inverted duty structure. Because on the basis of your accumulation, they give an entitlement. Akshay, similarly for me, purchases are there, but no sales. Again, 0 is my entitlement. So it makes sense only when I club few tax periods, that is April to June, all my purchases pertain to April to June will be compared with the sales happened in June. Now, as a mathematical, I'll give an example, students. When we go to an example, you'll understand how do we apply this inverted duty structure. So here, when we talk about relevant period, if I file April to June, my relevant period is April to June, which is ending on June. My return GSTR 3B for June is filed on 20th of July. So on the basis of this 20th of July, I have to say 2 years from 20th of July. This is my relevant date. Moving on further. In case of tax paid on provisional basis, the day when final assessment order has been given, when they have given the final assessment order, from there within 2 years, I have to file my refund application. In the case of a person other than supplier, like RCM, sir, I have paid tax on RCM. The day I received the goods and services, that day from will be the relevant date. Here, section 12 or section 13, when I have received those goods, when I have received those services, that will be called as a relevant date. Please remember, I gave example of moved minerals in case of your reverse charge mechanism. So when I pay tax on reverse charge, and if Supreme Court gives a verdict that I am entitled for refund, I will get a refund from the day I have received the goods and services, from there 2 years. In any other case, the day you made the payment, from there 2 years has to be calculated. Example, sir, I have received an advance from my customer. I paid tax. The day you pay your tax, from there 2 years. What is your date of payment of tax? So the transaction which is shown in GSTR 3B, that transaction, the day you file your GSTR 3B. Why? The day I file my GSTR 3B, my debit to electronic credit ledger or debit to electronic cash ledger will happen for making the payment of tax, which is there appearing in my electronic liability ledger. So students, this is a provision which is talking about your relevant date. Relevant date. Now, let's go to the procedural aspects. We next 10 to 15 minutes. These are all procedural aspects. Not to be worried, examination will not be tested, but practically you need to have an understanding how my refund application works through. First and foremost is acknowledgement. The moment I file my refund application electronically, and if the claim is from okay, the moment I file my application, this particular application will go to the corresponding proper officer. The best thing with the GST process is there will be a proper officer. This proper officer could be a state officer, could be a central officer. I as an applicant will not get to know will it go to state or will it go to central. Reason, based on my jurisdiction, the file will go to the respective officer. Once the file has gone to the proper officer, this proper officer within 15 days, he will verify the attachments. Whatever application I filed electronically, he will see. Praveen has filed an application. What is the category he has filed? What is the purpose he has filed? What are the supporting documents he has filed? Did he file within the relevant date? So these basic aspects, the officer is going to verify. So he's going to scrutiny this application. For what nature of application, whether you are entitled to file the application, what is the relevant date, whether it is in timely manner, and sufficient documents there or not. And where application is found to be complete, everything is intact, he gives an acknowledgement for this particular application file. RFD02, RFD03, RFD04. There are various forms. No need to mug up the form. You can just say the relevant form notified under GST provisions. Again, I'm repeating, RFD01 is a form which is called as an application form. Examination, you need not mug up RFD01, RFD02, etc. Even e-waybill related provisions. What you can do, the relevant notified form as per the GST provisions. That is good enough for my examination. Now, so what happens next? I have filed application. I got my acknowledgement. So what happens? What if there is a deficiency? Deficiency means Praveen has filed an application. By filing an application, Praveen says that this is export of service with payment of IGST. But Praveen has not given the export invoice document. Praveen has not given the bank FIRC. Like, see, you have given a LUT. Reference to section 16, you have obtained a letter of undertaking. What? Praveen said that, sir, from the day I export, within a period of 1 year, I get the money in convertible foreign exchange. By filing a refund application, the proof of that money received in foreign currency is missing. Then the officer can raise a document called deficiency memo. Where a deficiency memo is noticed, the application will be rejected. And this deficiency memo will be communicated to the applicant. So once I know that this is the reason, the officer will clearly mention what is the reason he is going to show the deficiency. Means an opportunity is given to the assessee, the registered person, to rectify the mistake and resubmit the application form. Then the deficiency which is communicated under SGST or CGST is deemed to be communicated under another law. Now, there is a mechanism called provisional refund. That means I get a 90% of the total refund, where in case if the application is in relation to zero rated supply, export of services with payment of IGST, supply of goods or services to SEZ unit or SEZ developer. These two transactions, I get a refund which is called provisional refund. How much? 90%. So the moment I file an application, I get an acknowledgement. After the acknowledgement, straight away 90% of the amount provisional basis will be given to me. The above amount will be 7 days of the acknowledgement. From 7 days of the acknowledgement, I'll get this 90%. And the balance 10%, officer will scrutinize all the documents. Once he feels okay, he'll give the balance 10%. What if, sir, I have filed an application, officer feels that there is a deficiency or you are not entitled for refund. Reason, officer feels that whatever supporting documents you have given are not sufficient enough. Then the officer will give a show cause notice. and he will give a reason why this notice has to be responded by me as an application and why he should not reject my application. The moment I receive a show cause notice, please keep in mind, majority of the things, 15 days is a standard time. If you remember registration, any amendment to the registration within 15 days I have to file. I have to get I get a show cause notice, reply back within 7 days. So here, whatever show cause notice is given to me, within 15 days I have to respond back. Once I given a reply, officer will go through my reply. He'll give an opportunity of being heard, and then he'll pass an order. He will pass an order either to grant me refund or to reject my refund. Now, this provision says, Praveen, you have filed your refund application, well and good. But when I see in my system, I notice that you have not filed your returns, or there is some order, there is some particular assessment where you have to pay tax but not pay. I repeat once again. My Kundali is there with the GST officer. The moment I file my refund application, I get a entitlement for refund. Before passing the refund, the officer checks my history. There will be record. Praveen did not file the GSTR 1 for 6 months. Praveen did not file GSTR 3B for 3 months. So the officer says, Praveen, look, you're a defaulter. You didn't file your returns. Possibility is there. There is a show cause notice given to me. There is an order which is confirmed on me, and I haven't gone for an appeal. That means some amount which is due from me as an assessee. What happens when this amount which is due, I haven't gone for an appeal to get a stay? That particular amount will be withheld. And also they say, until and unless I file my returns which are due, I'll not get entitlement for the refund. What if? So there is an order which is passed, like show cause notice, got converted as an order. I didn't respond to show cause notice. I also didn't respond to the order. Whenever there is an order passed, within the prescribed time limit, I have to file an appeal. Next 2 sessions, we are going to discuss on appeal provisions. So if I don't file an appeal with the respective officer, whatever amount I'm entitled for refund, that will be withheld and the balance amount will be given to you as a refund. And whenever that money is being adjusted, they will give a opportunity of being heard, and then they will do the adjustment. Next, there could be a scenario where I'll give an example. We were talking about bill trading. The other day we spoke about an example where Akshay sold goods to Namita, Namita sold goods to Naveen, Naveen sold goods to Priya, and finally Priya sold those goods to, say, Praveen. On record, transfer of invoice happened from Akshay to Namita, Namita to Naveen, Naveen to Priya, Priya to, say, Praveen. Nowhere physical movement of goods have happened. In this process, Praveen filed a refund application with export of goods with payment of GST, and customs authority said that, look, Praveen has not filed bill of entry or something is fishy with Praveen's transaction. Kindly hold back the refund. Customs authorities intimated to the GST authorities. Now, there is a network which was established. Commissioner feels that, like, Praveen filed a refund application, Namita filed a refund application. When Namita filed a refund application, Commissioner felt somewhere in this loop, there is a one assessee who has not paid the taxes. Let me hold back the refund due to Namita. So that particular aspect Commissioner can do only when he has given an opportunity of being heard to Namita, saying that, look, I feel that there is a suspicious transaction. I cannot give you a refund at this moment. The moment I give a refund to you, Akshay will come and ask for a refund. So let me hold the refund till the matter attains finality. Once the matter goes and gets settled and they feel that it is a genuine transaction, none of them are have done any frivolous activity, then Namita gets a refund. Does she get only refund? She gets refund along with interest of 6% per annum from the day she gets the entitlement for the application has been filed for refund. In detail, I'll explain this 6%. There is a separate slide. Wait and watch for that interest. Students, we're at 7:55. Let's have a break for 5 minutes. We will resume back at 8 p.m. So I'll give a break of 5 minutes. Let us continue with our discussion. There are a couple of questions. There are a couple of questions with respect to the discussion what we had so far. Let me take those questions and then move forward. There's one question from Gopi Nar. What he says, sir, in refund application, when export is done for exempted goods, I want to avail a refund with payment of IGST. So in GST 1, what tax rate I have to put? I will say this is a practical question which is put across. Benefit of other students, I'll explain once again. So there are goods which are exempted. When I say goods are exempted, the rate of tax is not specified. Under section 16, subsection 3, clause B, they say you can export with payment of IGST. The question which Gopinath has put forward is, so what is the rate of tax? Now, I don't know the rate of tax. Example, agriculture produce. Say rice, I'm exporting rice. Rice is exempted commodity. Should I put 12%? Should I put 18%? Should I put 40%? Now, the answer for that question, Gopi, there's no clarity which is given in section or a rule. I would recommend make an export without payment of IGST, claim the refund of accumulated ITC. Simple reason. There could be a dispute saying that you have claimed a refund for rate which was not notified. So because the exempted goods, there is no rate, I would recommend don't go with an option called export with payment of IGST. You will be at stake. So I'm just cautioning, go with the other option, export without payment of IGST. Second, there is a question from Namita. In case of a reverse charge mechanism, in case of Mohit Minerals Supreme Court judgment, say if the judgment comes after 3 years of receipt of goods, what will be the refund available? Will the time limit get lapsed? Now, in this case, Namita, it is not, the relevant period is not receipt of goods. The relevant is the day of order communication. Because I have gone on an appeal, in appeal I was got to know that the tax which I have paid is an unlawful tax. So from the day of appeal order, which was communicated to me, that day onwards, 2 years I have to count, not the date of receipt of goods. Further, Namita has a question. 90% of the refund is given on a provisional basis. And later the department gets to know that this is a fake invoice. So government will be at loss. Answer is 100% true. Government money is at stake. Coming back now. So what if input tax credit? I was given a formula. Based on formula, they say your balance sheet has got 85 lakhs of input tax credit. There is a formula. As per formula, you should get back 85 lakhs. So what I have done by filing my application, IGST, CGST, SGST, all three put together, I debited 85 lakhs. Once this application is gone, my rejection our officer rejected the application. What will happen to that 85 lakhs? So the law says when you file an application for refund of accumulated input tax credit, that particular accumulated input tax credit will be refunded back to you. I repeat, that accumulated refund, what you have debited by filing your refund application, will be recredited to your electronic credit ledger. So what if only partial rejection is there? Out of 85 lakhs, 40% has been rejected, 60% has been sanctioned. So that 40% will come back to electronic credit ledger. The 60% which is approved will come into my bank account. This is a mechanism. And once the refund application has been rejected, it is deemed that you are not entitled for that particular refund, or you gave an undertaking to the proper officer that you will not file an appeal. So either of these two happens, that money will come back to your electronic credit ledger. Now, we are going to start with the important aspect, which is the hardcore topic, which will be tested in your examination for 4 marks problem. Let's start with your refund of unutilized input tax credit, where I have a balance in my balance sheet which gets accumulated every tax period, means every month. Why? on account of zero rated without payment of IGST or on account of inverted duty structure. I repeat, my input tax credit in my balance sheet, in my books, gets accumulated on two reasons. One, zero rated supply without payment of IGST, inverted duty structure. Now, when we talk about inverted duty structure, please keep in mind, not every business is entitled for inverted duty structure. There are certain terms and conditions. What is that? In case of zero rated supply, only input and input services are permitted. What is restricted? Capital goods refund is not permitted. So this is not permitted. In case of inverted duty structure, only inputs are permitted for refund. With respect to input services and capital goods, it is restricted. So I repeat, in case of zero rated supply, condition is accumulation on account of capital goods purchase, you cannot get a refund. In case of an inverted duty structure, only inputs, raw material or inputs, I will get a refund. Capital goods and input services not entitled for refund. And when I talk about inverted duty structure, there are certain industry, like example textile. As of today, they have said all textile industry are not entitled for inverted duty structure. Why? Textile, all these apparel clothes are at 5% notified rate of tax. Now this textile, most of them are processed on job work basis. A job worker who does the processing, they charge GST at the rate of 18% or 12%. So purchases is at 12% or 18%, output tax is at 5%. Unfortunately, the textile industry is barred from filing a refund on inverted duty structure route. So when we know this law, we also should know who can file an application, who cannot file an application. As of now, in your syllabus, that is not tested. This test you, how do you quantify zero rated and inverted duty structure. Calculation of this particular formula is alone tested in your examination. Now, let's start with your zero rated supply with respect to export of goods and services without payment of IGST. For that, there is a formula. What do they say? I can get a refund which is equal to numerator. My numerator is turnover of zero rated supply goods, turnover of zero rated services. So my numerator is zero rated supply of goods, zero rated supply of services. This is my numerator divided by denominator, a term called adjusted turnover. So I have a numerator, I have a denominator. Denominator is a turnover which is little more than numerator. So when I apply this, I get a ratio. That ratio is applied on net ITC, net input tax credit. Now, this is a very simple formula. This is a simple formula which will be tested in your examination. So numerator, you see here carefully, goods, services. That is your turnover of zero rated supply. Turnover of zero rated supply. So all my zero rate of goods, services is my numerator. My denominator is something called adjusted turnover. Now each of these terminology, I'll explain you in detail. Students, again and again, I'm telling you, examination, please wait and watch for a problem for 4 marks to 5 marks on this formula called computation of refund under zero rated supply. They'll give you a transactions. From transactions, you have to quantify numerator, you have to quantify denominator. On that, you have to apply something called net ITC. Now, I'll explain this terminology. I'll come back to Excel to give you a problem to make you understand on this. Now, first thing, net input tax means ITC on input services. Please carefully see, capital goods is missing. My rule 89 says that when you multiply something called net ITC, this is nothing but ITC on input and input services. So here, capital goods is kept aside. Received, availed, ITC availed where during the relevant period. during the relevant period. Now, what is your relevant period? You remember that example, April, May, June, clubbing of months, clubbing of a quarter. I can club months together. I can club quarters together. I can club half years together. But unfortunately, I cannot club years together. I can file a refund application for one whole year. I can file a refund application for half year. I can file a refund application for a quarter. I can file a refund application for a month. So when you club a period, what is the period you are clubbing? So when I file my refund application, I'll say April 2021 till July 2021. I can club 4 months together. Or I can say April 2021 till September 2021. So when I go for refund application, students, there is a selection of a period. So this refund application is being filed from April 21 to April 21 or April 21 to September 21. I can select the period. So this selection is nothing but my relevant period. So what they say, whatever input tax credit you have availed in this particular relevant period. So what I have to do as a taxpayer, I look into my GST 3B. In my GST 3B, the respective period input service capital goods. Whatever credit I have taken, exclude your capital goods, take only that input and input service. Now, there is something called exclusion of 4A, 4B. As of now, back of your memory, this 4A, 4B, you can just make a note. 4A talks about your deemed exports. 4B talks about your merchant export. That means any transactions which are on account of deemed export, advance authorization, EPCG, EOU, or merchant export. All these 4 transactions as a bucket, keep away. So when you look into your purchases, in your purchases, you have this deemed export receipts, merchant export receipts. These I will keep aside. Namita, your question, you've asked one question called what happens to that 1%, what I pay, 0.05%, 0.05%. That purchases are covered under 4A, 4B. There is a separate application. I will not club with my 0 rated. So students, this is my ITC. Are we clear with ITC? I repeat, ITC excludes your capital goods. Please keep in mind exclusion of capital goods. Moving further. Turnover of 0 rated supply of goods. So what they say, in relation to goods, I have a bad tendency as a tax officer. I will not believe what you are doing is correct. So what they say, your 0 value, that is supply of goods will be the actual value of goods what you have declared. That is value of a 0 rated supply made during the relevant period. This I call as A. Or value which is 1.5 times the like goods domestically supplied. This, whatever you are exporting, the like goods I call as B. This B which is domestically supplied. I'll compare this A, I'll compare this B. Now B, since it is a domestic, I'll make it as 1.5 times. Now, why do they want to do? There could be a transactions where you export to your own entity, which is there, maybe like a parent company in a foreign nation. You want to accumulate, you want to encash your duty benefit. I'll just give an example. This is a practical case where we have dealt under the customs and GST law. There is one assessee who have their counterpart in Korea and Kenya. Korea and Kenya, they have the parent company who have interest in this Indian entity. There are some parts which are imported into India. The rate of tax happens to be 18%. Assembly happened in India. All that particular items, 80% were exported, 20% were sold in India. The goods which are exported out of India, the value, like say there is a particular pen, just an example. A pen which is sold in India, I sold it for 10 rupees. The same pen which I've exported, I've sold it for 100 rupees. Reason, exchange of money, there is a accumulation of ITC, some sort of tax planning is required. Now what I've done, the pen which is sold for 10 rupees, I have disclosed as 100 rupees for export transaction. The moment I say 100, on 100, 18% happens to be 18 rupees. But in India, what you're doing, the same pen you're selling for 10 rupees and you're paying 1 rupee 80 paisa to government. One hand, you're paying tax to government 1 rupee 80 paisa. On the other hand, you're getting a refund of 18 rupees. Government felt something is wrong. Now, what they have done, they compared this A, which is exported out of India, and they say, Praveen, nothing doing, equivalent, whatever like goods are there domestically, the value of those like goods multiplied by 1.5 times. So if I say 10 rupees is domestic value into 1.5, 15 rupees, whichever is less, 100 rupees declared in my GST return, 15 rupees, which is sold domestically, whichever is lower, shall be considered as your value turnover of supply of goods. Are we clear with this, students? Turnover of zero rated supply in relation to goods. Before I go for a problem, I want you to understand this terminology, then I can clarify exactly how we apply this particular problem. Namita says in Gopi's question, goods are exempted, then liable of IGST payment will not arise. Now, what Gopi is asking Namita, when I go to section 16, subsection 3, I have been given a choice. Export with payment of IGST, export without payment of IGST. Sorry, first option is export under LUT or bond. Second option is export under payment of tax. So question of Gopi is, sir, I chose second option. I want to export with payment of IGST. What is the rate? For that, I have been telling that because there is no rate prescribed, go with the first option. Yes, Namita, I gave example of Mohit Minerals in relation to this particular refund of when the Supreme Court passes an order, from there the 2 years have to calculate. Now, so far so good. No questions raised with respect to this point. Let me come further. Now, with respect to services. Now, services is a little tricky. What they say in relation to services, the backdrop is the money which is received in foreign currency is something which they are looking for, right? In relation to services, it is not the invoice alone. If I raise an invoice and I don't get money, why will government give a refund? They wanted to calculate that value where actual realization has happened. So what if I receive money in advance? All these aspects were clearly explained in this fashion. What they say, first, for the relevant period, whatever money I have received, I repeat, aggregate of the payments received. Aggregate of the payments received during the relevant period. So whatever foreign currency was received, assuming I file a refund application for April 21 to September 21. So April to September, all money which I have received in foreign currency, I take that as one place. From this, what I say, to that add the zero rated of supply, where the supply has been completed, for which payment had been received in advance in any period prior to the relevant period. That means to say, April 21 to September 21, I have raised an invoice. In this 6 months. For this invoice, my money received prior to April 21. I repeat, I am taking April to 21 as a period. For this April to 21, whatever money has come, let me take that as base. To that money, I add what the invoice for which payment was received prior to April 21. From that, I reduce what the advance of that money during April to September, for which no invoice was issued, for which no invoice has been issued. So this is what is in relation to my export of services. I'll explain this in this fashion, students. Turnover of zero rated supply service. relevant period, say April 21 to September 21. So what they say? Foreign currency received during April 21 to September 21. Add invoices issued during April 21 to September 21, for which money received in advance prior to April 21. That means before April 21, maybe January, February, March, I have received money well in advance. So that invoices I'm adding back. Less, so what if there is a money in this period for which I have received as advance, no service was rendered. Advance received in April 21 to September 21, for which no invoice issued in the period April 21 to September 21. Now, this is my computation of service. This is my computation of turnover for service. Again, no rocket science. It is just an application of common sense. Let me come back to my presentation. Now, sir, I know ITC. I know numerator. I know what is value of goods, what is the value of services. Now, finally, denominator. My adjusted total turnover means the total turnover in a state. For that, I add the turnover. Okay. The total turnover in state, excluding turnover of services. Why? My turnover of services, we just understood what is the money received in a period, less money invoiced in the period, add money invoiced in the period, less advances received in that relevant period. There is a definition for turnover of services. So what they say? Turnover in that state minus turnover of services. So I have done that. What next? To that, add the turnover of services which we have calculated just now. Whatever we saw in Excel file, add that back. So I have done that. What next? From that, you remove exempt supply. Why do I remove exempt supply? Because my exempt supply, I don't have an input tax. So I should not put something in denominator which is taking away the benefit of ITC. Exclude that zero rated supply. So what else? The transactions which are covered under 4A, 4B. What is that? My deemed exports, that is advanced license, EOU, etc. Or my merchandise exports. This transactions, whatever is there, that turnover, please exclude. That is what they are saying with respect to my denominator. Now, friends, I'll come to Excel file to make you understand once again this point. Zero rated supply, inverted accumulated ITC. So whenever there is accumulation of ITC, my formula will be for the relevant period. What is the formula? Numerator, denominator. My numerator will be zero rated supply of goods plus zero rated supply of services. My denominator will be adjusted total turnover, adjusted turnover. Now, this numerator by denominator, what I will do? This I multiply with something called net ITC. Now, what is net ITC? Input in input services availed during the relevant period. Now, when I talk about zero rate of goods, please keep in mind, you have actual value of exports, equivalent domestic value. So my equivalent domestic value, the goods of like quality and like kind, this value and this value is same. I don't have a difference. The pen which I have exported, I sold for 100. The same pen which I sold in India worth 100 rupees. Then there is no change in my supply of goods. For zero rated supply of services, just remember, this is a formula. I need to have the money received during the period. To this, I add invoices raised during this period for which money was received in advance. I'll reduce the money received in advance for which no invoice has been issued. Now, this is my turnover of services. So, adjusted turnover, my adjusted turnover, this is in simple terms, turnover in state minus zero rated supply for services, add zero rated supply for services, what we have identified, less exempt supply. By exempt supply, for exempt supply, I'm not taking ITC. So my benefit of ITC should not be lost. So exempt supply, I have to exclude. Also, less turnover of 4A, 4B. What is 4A and 4B? My 4A and 4B is your deemed exports, merchandise exports. These two things I have to set aside. Now, are we clear till now? Yes or no? Students, are we clear with this formula? Before I explain a problem, I wanted to get a confirmation from you. Is this clear explanation formula, what numerator, denominator, are we clear so far? Sumit asking a question, so what if I have sold the pen for ₹5? So if I have sold for ₹5, export is 100 rupees and my domestic value is 5 rupees. 1.5 times ₹5. So I'll say 7.50 rupees is a zero rated supply of goods in relation to export. That will be the answer, Sumit. Gopinath is asking a question. Sir, I bought raw material on March and exported in April. So ITC accumulated in March, as you said, we cannot club different. I'll be losing, Gopi. Unfortunately, I'll be losing on that front. Question from Gopi is, so what if all purchases happened in March for which actual bills are happening on April? Unfortunately, I'll be losing that particular portion. No questions from students on this discussion so far. So now I'll explain your problem on this particular calculation. Let us take a calculation of this zero rated supply. So first I'll give you sales information. So this is a relevant period, April 21 to September 21. Particulars, then amount of, I'll say turnover and I'll say tax. For ease, I'll say output tax. Now, particulars. First one, export of goods without payment. Export of goods without payment, say 28,50,000. Tax paid is 0. Point number 2, domestic supply 18,50,000. So I have paid 12%. Third, interest on fixed deposits, so 2,80,000. GST is not paid on that. Fourth, advances received and billed. advances received and billed, I'll say 42 lakh and GST at the rate of 18%. Now, this is my turnover for that particular month. For calculation of denominator, I have exempted supply, that also taken into consideration. Yeah. So this is my transactions which took place for the period April 21 to September 21. Yeah. I'll put the total. Now, this is my transactions for April to 21 to September 21. Input tax. I'll say purchases, inputs, capital goods, and input services. Now, inputs, I have taken a credit of say 5,82,000. Capital goods, I have taken 2,45,000. And services, I have taken another say 4,62,000. Total. This is my input tax for the relevant period. Now, question comes here. Oh, okay, 5,82,000, 2,45,000. Yes. Now, for the period April to September, if I see, my input tax is 12,89,000. My output tax is 9,78,000. ITC is higher than output tax. Now, assessee comes to you for filing of their monthly returns. So looking at this data, you will say to the assessee, look, you purchased so much where month on month you're not paying any cash. There's an accumulation of ITC. So the assessee asks, so please help me with this refund. Please see if something can be done with respect to this particular thing. Then when you look into the transaction, you notice that there's export of goods without payment of tax, where my output tax is not paid. You will see that, look, there is accumulation happening on account of your this thing. For a moment, assuming that this is 18% taxable, then your output tax happens to be 14,91,000. For a moment, you pay tax on this, your output tax is 14 lakhs, your input tax is 12, where you have exhausted your ITC. Now, he will say that, look, this is a culprit. That means, because you're not paying any taxes on this transaction, you can claim a refund. Now, examination, they'll ask you, please do the calculation of refund entitled under section 54. Read with rule 89.4. 89.4, rule 89, sub-rule 4 deals with your zero-rated supply. Are we clear, students, so far? Now, let's do the calculation. Numerator, denominator, then net ITC. Now, these are the three elements I need to calculate. Numerator, zero-rated supply of services, zero-rated supply of goods. Now, here I can see only serial number 1, which is my zero-rated supply. Serial number 4, advance is the same, and there is a GST paid. Because GST was paid, it is not a zero-rated, it is not SSA nor exports. So I will consider only point number 1. Any assumption to be made? Export of goods, when I make, I have to have equivalent value of domestic supply. Equal like goods which are domestically supplied. So we will make a assumption number 1. What is that? Like value of goods exported assumed to be same as zero rated supply. That means I don't want to dispute whatever 28,50,000 you have exported. I presume that the same were supplied domestically. I don't want to dispute. So my numerator, zero rated supply of goods plus zero rated supply of services. So my numerator happens to be 28,50,000. Denominator. What is my denominator? My denominator is your turnover in state minus exempted supply. So here interest on fixed deposit is exempted supply minus your zero rated supply of services. Here in this given transaction, there is no zero rated supply of services. So what I'll say, only this particular exempt supply I'll reduce. Also 4A, 4B. What is it 4A, 4B? Your inverted, your deemed export or merchandise export. I don't have those two transactions. So I'll just exclude that and I'll say my denominator is 89 lakhs. Net ITC, input tax availed on input services for the relevant period. So for my relevant period happens to be net ITC, input plus input services. My net ITC is 10,44,000. So I have numerator, I have denominator, I have net ITC. Now what is that I have to do? I just need to calculate refund. So my refund happens to be, I'll just scroll up for students to see. My refund is equal to numerator divided by denominator multiplied by net ITC. I get sum called 3,34,000. 3,34,315. Refund as per formula. Now, students, are we clear till now? Before I go further, numerator, denominator, and this formula, net ITC. Are we clear? Sumit, in your example, what is the value of pen domestically sold, ma? 5 of domestic sales is like undue hardship. How can the price of goods exported be equal to price of domestic? That's why they said 1.5 times, Sumit. Sumit, see, if you're selling for domestically 5 and you're saying, you need to little elaborate, ma? And Namita says, so 1.5 times the domestic supply is very unlikely. Now, most of the times, Namita, exporters doesn't agree with this 1.5 times. What they say? Sir, whatever formula you say, my export quality and domestic quality doesn't agree at all. My export quality is 10 times better than domestic quality. That is how they say, and they set aside this 1.5 times. So in practicality, what we do, we will just say that export quality has not domestically supplied. So it is 0. Whatever export value is there, let that be considered. And they substantiate with the cost sheet. So I haven't seen any questions so far based on this calculation. I presume that this computation is clear, ma. I'll go ahead with this. Now, students, let us look at this carefully. This is my input tax credit. This is my output tax credit. Now, balance in electronic credit ledger. Now, at the end of September, when I find my returns, from 12 lakhs, I reduce tax for 9,78,000. Look at this very, very carefully. My purchases, assuming that there is no opening balance, I made purchases where 12,89,000 I got a input tax credit. My output tax is 9,78,000. So when I set off this output tax with this, my balance is 3,11,000. I call this is A. I call this is B. Now, there is a checks and balances at the GST portal. Blindly, they'll not give you 3,34,000. What they'll say, 3,34,000 or balance available in electronic credit ledger as on July 21. C. Balance in electronic credit ledger when refund application filed. Even department is smart. The way assessee is smart, department is also smart. So what they say? A, apply your refund. B, in the electronic ledger when you file your return. 3, the balance on the day when you are going to file your refund application. Assuming I travel in time, I have been given 2 years time limit. Assuming for a minute, refund application RFD01 filed on, now this is for April to September 21. So let us say this is filed on 31st March 2022. And as on 2022, the balance is 2,85,000. So least of these three, A, B, C. I have highlighted, let me highlight this also. A, 3,34,000, B, 3,11,000, C, 2,85,000. Least of these three, I'll get a refund. This is what we need to understand. This is what we need to understand. Are we clear? Can I go further for inverted duty structure? Can I go for inverted duty structure? Yes or no? Namita says, sir, if I have exported pen for 100 rupees, but I have declared export value 50, you will get an export value of 50 only, Namita. Question from Gopinath. Sir, turnover means turnover as per GST Tier 1 or 3B. Because 3B, we make prior period adjustments of turnover. Please understand, Gopi. Turnover for that period, ma'am. GST Tier 1, 3B, whichever is right, that we will take into consideration. This is the turnover which I have to take into consideration. Students, do you have any doubts on this A, B, C? So far, what we have discussed. Examination, 4 marks problem you can expect in this calculation. So far, so good. Let me go further now. I'll come back to my presentation. Now, deemed exports and merchandise exports, please keep in mind. In case of deemed exports and merchandise exports, the value only for that, what is that you're paid, you can claim a refund. You're paid, say, for goods exported for 10 lakhs, you paid 1%, that is 10,000 rupees. You get a refund of 10,000. What you have exported in case of your merchandise export, only that you can claim as a refund. Now let's come to the important second element, inverted duty structure. In case of inverted duty structure, my formula is maximum refund is turnover of inverted structure divided by adjusted turnover multiplied by net ITC minus tax paid on inverted duty structure. So when I understand these terms, my net ITC shall be ITC on inputs. When I talk about zero rated supply, capital goods is set aside. When I come to inverted duty structure, only inputs I have to take into consideration. Adjusted turnover and relevant period have the same meaning what we have discussed for sub-rule 4. Now, let me come to Excel to make you understand for this particular inverted duty structure. Now, let's take example of inverted duty structure. The formula for me, turnover for inverted duty supply this I call as a numerator, denominator adjusted turnover, and the third element is ITC for the relevant period. Now, this multiplied by this, this divided by this multiplied by this. From that, I'll reduce tax paid on inverted supplies. This is what the formula explains. Now, let us Take an example. Relevant period, particulars, relevant period, particulars, turnover, output tax. Now, relevant period, April 21 to September 21, particulars, supply of goods at 12%. So I have 52 lakh turnover, which is supplied at the rate of 12%. Then supply of services, say 18%. So I have some job work which is done, 4,50,000. On this, I have paid 18% as my output tax. Third, interest on fixed deposit, say for some 1,25,000. Zero. This supply of services, let us assume that rental services. So these are the transactions which I have for that particular period. Now we are talking about inverted duty structure. No? There is no exports which I am taking into consideration. The moment exports come, zero rated supply comes into picture, you get confused. So I'm just restricting to the domestic turnover where there is a tax payable, there is a turnover which is exempted by way of a notification. Now, this is the details of my output tax. Next, purchases, input tax. Now, inputs, services, capital goods. On inputs, my purchases input tax credit happens to be some 8,45,000. Services, I get some 25,000. And capital goods, another 1,25,000. Now, I'll take a total over here. Now, output tax 7,05,000, input tax 9,95,000. Now, what is happening here? I have a input tax credit much higher than my output tax. What could be the reason? My inputs are at 18%. My services are at 18%. Capital goods, let us say 12 to 18%. Now, this is a scenario where since my input tax is getting accumulated, I have a benefit to explore under a route called inverted duty structure. My sales is happening at 12%. Assuming that if it happens to be 18%, instead of 12, I'll just make it as 18. Look at this scenario, students. My output tax is 10 lakhs. My input tax is 9,95,000. Means I have no accumulation at all. Now, this is pushing me to a scenario where my benefit of input tax is much higher than my output tax. Now, this I apply a formula called inverted duty structure, Rule 89, Sub-Rule 5. I'll calculate numerator, I'll calculate denominator, I'll calculate ITC. And tax payable on inverted supply. 4 elements I'll calculate. First, numerator. Numerator is your turnover of inverted duty structure. So my turnover of inverted duty structure is 52 lakhs. Denominator is my turnover in state minus exempt supply minus 4A, 4B. In this given problem, there is no deemed exports, there is no merchandise exports. And also services. Because it is not connected with zero rated supply, nothing of that sort is there. This happens to be my denominator, ITC. In case of zero rated supply, input services alone I have taken. Capital goods I have not taken. In case of inverted duty structure, only inputs I have to take into consideration. I cannot take the benefit. I cannot take the benefit of input service or capital goods. Now, tax payable on inverted supply. This is my output tax. Now, application of these three, application of formula on these three. When I apply formula on these three, I'll get a figure called, I'll get an amount, numerator divided by denominator into 8,45,000. I'm getting 7,77,699. So 7,77,000 is the input tax, which is attributable to my inverted duty structure. From this, I'll reduce 6,24,000. So refund entitled will be 7,77,000 minus 6,24,000. This is my point number 8. I'll explain for benefit of understanding once again. For inverted duty structure, the formula is turnover of inverted duty supply divided by adjusted turnover multiplied by input tax for the period less tax paid on inverted supplies. Let me come back to the presentation. Yes, this is a slide which talks about your entitlement of inverted duty structure. Refund, which is entitled. How do I get? Numerator, turnover of inverted supply. Denominator, total turnover. These two I apply, I'll get a ratio. This ratio I'll apply on net input tax credit. Whatever I get a result from that, I reduce the output tax which I have to pay on inverted supply. So coming back to the example, my given problem, numerator, denominator, how do I get? From 57 lakhs, I'm removing exempted supply. Input tax, I'm just taking only inputs. Input services, capital goods, I'm not taking into consideration. Now, tax already have paid on my inverted supply is 6,24,000. What I'm actually entitled is 7,77,000. So how much excess accumulated in balance sheet? In my balance sheet is 1,53,000. Now, when I file my refund application, as usual, clause B, what they say, clause B, 8,45,000 minus 6,24,000. This will be your clause B. And clause C, balance in electronic credit ledger when refund application filed. These three will be compared. Whichever is least of these three, that will be entitled for me as a refund. Do you have any doubts in zero rated supply and inverted duty structure? Please carefully understand this concept. 5 marks is a weightage in your examination for zero rated supply or inverted duty structure. Any question on refund, any of the theory what we have discussed, a problem predominantly on these two will be tested in your examination. Now, there is a question from Namita. Sir, if I think this was discussed. There's a question another from Namita. In case of zero rated supply of services, why we add domestic sales? Zero rated supply, we didn't added sales, ma'am. We add domestic sales. There is no domestic sales, Namita. Here, advance is received and billed. This is in relation to domestic supply. Export of goods, in this example, only one zero rated supply is there. That is point number 1. Point number 4 is not zero rated supply. So here numerator, I have taken only 28,50,000. Denominator, my 91 lakhs, from that, I just excluded exempt supply, which is interest on fixed deposit. Hope this is clear, Namita. But then Gopinath has one doubt. While filing refund of application, the input tax paid on capital goods cannot be taken as per the rules. That means it is a loss to the company. Yes, Gopinath. As of now, the way the law has been written, they apply the formula on input and input services. Unfortunately, capital goods are not allowed. So if you say, is it a loss? I would say it is not a loss. Do one thing. Export the goods with payment of tax. Use that input tax credit on capital goods for the purpose of payment. You can encash. I would say it is a tax planning, not a tax evasion. So if you feel that capital goods, there is a huge credit, export with payment of tax, there is no restriction. You can get entire amount as a refund. Next. In rules, list of ABC is not mentioned. Why we take this is not as per the rule 89, Namita. When I go for filing refund application, there is a circular 125 which has brought in this particular condition. So department, see, rules have not explained this, but department is very knowledgeable. That's how they are identified A, B, C. Whichever is least, you are entitled. Circular 125 has brought this particular restriction. Now, when you file a refund application, Amita, I have to debit my input tax credit for filing a refund application. The day when I file input tax refund, now in this case, what happened? Let's come to this example. Zero rated supply. The day when you thought you have to file refund application, your balance is 2,85,000. Your computation says 3,34,000, but the balance to debit in your electronic credit ledger is 285. So when you file your refund application, you only debit 2,85,000. You cannot debit beyond that. That is the reason there is a restriction of your ITC to the extent of 2,85,000. Then Namita is asking this question: how do we calculate numerator in case of a inverted duty structure? In case of inverted duty structure, the goods which are supplied at a lower rate, that is your numerator. In this example, Namita, my purchases, look at this selection. I have selected my sales is at 12%. My purchases is at 18%. If you just see the selection I have made, Namita, my purchases is at 18%. This purchase I use in a process where output is charged at 12%, Namita. So this sales I have taken as numerator. If you see this formula carefully, I have taken 52 lakhs as my numerator. Hope this point is clear, Namita. Good. So far, so good. Now, let's come back to my presentation. Now, we have understood what is permissible. We also have understood how much is the amount I can claim as a refund. Now, having understood all these things, there is a thumb rule. The law says that when you export goods and those goods which are subjected to export duty, don't claim a refund. Because the goods which are being exported are subjected to export duty. That means there is a restriction. So don't claim a refund of those goods which are exported where export duty is applicable. Or point number 2, under customs law, we study duty drawback provisions. If I file an application for duty drawback for customs duty and also IGST or CGST paid on those goods, I should not file a refund application. I repeat, when I export goods out of India under DGFT provisions, there is a duty drawback I have entailed. There's another faculty who is going to explain duty drawback. If I claim a duty drawback which is equivalent to the taxes, that is CGST, SGST, UTGST, don't file a refund application. This is a restriction which is given in my GST law. Now, for filing a refund application, law says that minimum 1,000 rupees your entitlement should be there. CGST 1,000, SGST 1,000. If the entitlement is 800 rupees CGST, 800 SGST, they say, please don't file a refund application. So what if the balance is from a electronic cash ledger? So when I file a refund application for electronic cash ledger, because it's my money, there is no limitation. You can claim whatever amount is available. Now, we are at 9 o'clock. There are 3 more slides which we have to discuss with. What I will do, tomorrow again, we are going to meet back. I'll discuss these 3 slides which are connected to refund, that is export with payment of tax. Little important, little tricky. We will stop our discussion for the day. We will resume back our discussion tomorrow. Till then, see you all. Good night.